Hey, we're going to get rolling in here this week. We've had some follow-through buying after that supply-demand report a week ago, and corn kind of ran to some resistance levels, a little bit further push in the bean market. And the wheat market's been kind of two-sided then after that report. But we just want to hit on a few things in here right now today. The first thing we want to bring up here is looking over at the crude oil market as we visit with producers. I mean, inflation is a major talking point, and inflation affecting the farm community is in the form of higher fertilizer prices, as they are just astronomical. I mean, I had a producer in Nebraska today tell me, that the bid of anhydrous from last Friday to Monday went up $100 a ton. I mean, there's just insanity out there on the fertilizer and the input side of it, and a lot of that's driven in here with energy markets being stronger. This is the crude oil market going back the last 20 years. That red line is around $78. You can go back to 11, 12, 13. That $78, $80, $85 level held a support, and we traded above $100 a number of times on crude oil during those years. And it wasn't until 2015, 16 before this market broke lower. Why this is important is when we look over here on the corn chart. Everyone talks about the drought rally of 2012. But you got to remember the corn market was extremely strong in 2011 as ethanol prices rallied with crude oil, and you had the mandate in here to produce more ethanol. And as you can see, 11, 12, and 13, they had front month corn holding about $5.75, $6. We had that push above there this year, earlier in the year when there's talk of declining inventory in here. But the last push is really because of energy prices. Now, if you want to be bullish on corn and think that corn's going to get a sustained move of $6, we really think you need to see crude oil going up to $100 a barrel. Now here we've got two charts, corn on the bottom, crude oil on the higher side. And as you can see on the bottom chart, and we've highlighted this a number of times, corn is really stuck in around a 60 to 70 cent trading range. And if you get towards crude oil, when we broke above $70 in mid-September on crude oil and went up to the recent high of 85, yes, that gave corn some support, but corn really didn't break out higher. It traded within its summer range, and it looks like it's finding some resistance here. Our whole point, if we really see a run up in corn, we think it needs to be led by the crude oil market. The other thing we want to keep in mind, and if you want to be bullish this time of the year, it's inflation or the potential demand. And what we want to show you here is a quick chart on where our export sales are at on a year-to-date basis. You can see in front of you on corn, last year at this point, we just sold over 1 billion bushels, 1.047. This year at 1.002, we're lagging behind a little bit, but nothing really catching our eye in here right now where the USDA's got to make some changes. The beans, though, it's a different story. You can see in front of us where a year ago we sold just over 1.1 million bushels so far, and this year it's just less than 700 million. This 400 million bushels lagging last year, especially considering good South American weather, that's a big concern. So if you look at a bearish side around the demand, you probably got to look towards beans. Wheat export sales are lower than where they're at a year ago. The USDA's forecasting to be down some. We don't think that's a big issue in here on the wheat side of it all. The big attention here, though, is on the bean side of it. As we go to our next chart, we want to show where U.S. prices are at compared to the rest of the world. U.S. corn is about 30 cents cheaper than Ukraine right now, but Ukraine has a shipping advantage, heading into the Far East, and that absorbs about that 30-cent price advantage that we do have. So we could say that U.S. corn is about comparison to the world market. That's why we are seeing some export business. On the bean side of it, U.S. beans right now are offered 30 cents a bushel than Brazil beans. That's why we're competitive. That's why we're getting some weekly export sales announcements. The concern, though, for beans is once you get to late January, February, Brazil beans are cheaper than U.S. For the wheat side of it, we're not competitive in here right now, but we really don't have the supplies to be a major export player as EU wheat prices are cheaper than U.S. offers. But as long as the EU wheat market stays strong, this wheat market should hold together as well. As we want to wrap up here today, we think if you're bullish this market, it really has got to come down to inflation. With inflation, you need to look at crude oil. If crude oil stays strong, corn can be well supported. When it comes to the demand side of the equation, though, you got to look at the exports. We're a little bit more iffy there. Again, we just pointed out crude is what you need to watch for the inflation trade. On the world market, we're competitive with beans now. That's not going to be the case. The other interesting thing to watch is South America corn prices, as Brazil corn prices right now are trading at a 6-month low because their crop is off to a relatively good start. Their first crop is off to a good start, I should clarify. And so we need to really keep an eye on the South American corn offers. We think there's something both for the bulls and the bears in here right now. We read beans as being the weak link with a good start to South America. South America beans cheaper after the first of the year, and our export pace so slow. On the bullish side, crude is still in an uptrend. Wheat, we got declining supplies. You can make the argument there that one of those two could be bullish, and maybe they could lead this corn market higher. What we just find so odd in here right now, though, is that corn is actually a follower instead of a leader. That's usually not the case. We look forward to bringing these webinars to you every week. If you have any suggestions, let us know. Have a great day.